If you're trading for an online prop firm, you're funded. You cannot risk 1% of that amount you're funded with and expect not to blow up. You see, you're funded with a 100K account, you have 5% max drawdown. That's just 5K. So if you were to risk 1% of that account, 100K, for example, that would mean you would risk 20% of your max drawdown. That is 20% in one trade. Just 2 or 3 losses with that risk would put you into deep trouble. And 2 more losses after that, and you're out. The way that I like to think about this is how much risk allowance do I have from my firm? Do you have 1 or more accounts? You could add them together and have your total risk for the day, for example. But it's very important to understand that you cannot risk a percentage base from your account balance when you only have 5% loss allowance, for example, or 4%, as I see some firms have. So what we have to do is to understand what is the actual capital or loss allowance that I have. And then out of that amount, you will have to plan what is an acceptable loss for one trading day, for example. What is a risk that I can actually live with? What is a risk that I can trade with? I can have a drawdown, I can have a series of losses and not blow up. So let's say you have that 100K funded account, for example, you have a 5% max drawdown, which is fine. That is no problem, right? But you will have to account for it, okay? So you have 5K max loss allowance. Maybe you shouldn't risk more than $50 per trade, for example. And I know if you think about the 100K account and risking $50 or 100 even in one single trade seems very small. But if you actually were to think about the allowance, how much you're allowed to lose, not how much you're allowed to trade with, right? Then it actually starts to make sense. And I think that many traders who apply for online prop firms are very short term in their thinking, right? But if you want to survive in this game, if you want to have this funded account, a year from now, and actually be able to withdraw profits that you can keep, right? You're not, going like this up and down, blowing accounts, have to retry for an audition or evaluation. I mean, guys, you will have to think long term. You will have to trade with a risk that is sustainable to the data that you have, of course, your hit rate, your typical drawdown series, etc. I think that's the right way to think about it.